Hello, I'm Neil Screaton, owner of Screatons Limited Chartered Accountants. In previous videos we've talked about the capital gains tax aspects of gifting properties, and in this video we're going to talk about the inheritance tax aspects of giving properties to your children or whoever. Now, inheritance tax is payable at 40% generally speaking, so ways that you can reduce your exposure to it are always welcome. Now, many people these days give away their property before death in an attempt to avoid paying inheritance tax on them as part of their estate. Now, there's a few points to make. Generally speaking, with inheritance tax, if you give something to your children, if you then survive 7 years, then that gift becomes exempt from inheritance tax. However, if you give your home to your children before you die, but then at the same time continue to live in that property, then the 7-year exemption does not apply. Revenue and Customs call it Reservation of Benefit. So if you continue to live in the property, that will continue to be part of your estate. If you sell the property, give the proceeds to your children and then go to live somewhere else, then that's fine. If as long as you live 7 years, the cash is not deemed to be part of your estate. However, if you sell your property, give the proceeds to your children and then move into their house, then the 7-year exemption does not apply. There's still considered to be reservation of benefit, basically, unless you pay a full market rent to your children, which obviously has income tax implications on them. The other sort of scenario which can come up is if your children and you both sell your properties, pool your funds and buy a new property which you then all live in. If you do that, then the proportion of the new property which is deemed to be yours continues to be part of your estate. Now, the thing to bear in mind is that everybody has a nil rate band which is exempt from inheritance tax of £325,000, and this is transferable between spouses upon the death of the first spouse. So any unused on the death of the first spouse is transferred to the remaining spouse. So bear in mind that you potentially got a £650,000 exemption anyway if your property is worth less than that. There are also other ways of reducing your inheritance tax bill, but they're the main things to do with gifting properties. Now, if you have any questions arising from any of the issues that I've talked about, please don't hesitate to get in touch. We're on 01827 715 264, info@screatons.co.uk. Our web address is www.screatons.co.uk. Thank you very much.